You know, there's a funny thing about common beliefs that we have in our society. We get them wrong sometimes. In the 1950s, we used to think as a society that cigarette smoking was healthy. Now, fast forward to today, one of the common beliefs that we have is that the best thing for retirement is to put money into a self-directed IRA or another retirement account and then throw that money into the stock market. So my name is Jim Manning, and here at the Passive Wealth Show, what our mission is to help people transform from income generators into investors that have their money go out and work for them and generate them more passive income than what they're able to do on their own. As far as my background goes, I'm working now on my fourth real estate company. The other three are all multi-million-dollar companies. We've done several thousand deals, and I actually have built up a personal rental portfolio that if I wanted to, I could retire in the next 12 months and be good. And it wouldn't matter if I lived to 80 or 90 or 150. You know, being 40 years old, I could be 40 years old and be set for the rest of my life. So I know just a little bit about this and a little bit about retirement, and by no means am I an expert at everything. What I can do for you is share with you what I've done that's helped out and worked out for me, and what's worked for me to be successful. And I had the opportunity to talk to an individual that I love dearly. He's like a top 5 person that I love more than like anybody else on the planet, right? And this individual is a self-made millionaire. He's 73 and retired. And when you're 73 and you're self-made millionaire, they start to make you take out distributions, right? Like they force you to take money out. And so he's in a situation where he's having to take money now out of his nest egg, and inflation has hit, and by the way, and his nest egg is down 20%. His net worth is down 20% than what it was just a couple of years ago. So he confided in me. He said, "Hey Jim, I don't know if I have enough money. I'm stressed out now." And what he did was he bought into the same level of thinking and the same thing that I was taught, the same thing that he was taught growing up, that the very best thing was just to do that and put it into the stock market. So I have another client that we talked to that has 70% of his net worth in stocks and another 30% in bonds. And when the market was going up and going crazy, he was making really good money on that 70% in stocks, but that 30% in bonds really wasn't yielding him much of a return. Now that the market's shifted, his net worth's down to about 20%, and the 30% of the bonds just have lost a little bit less money for him. There's actually only one bond investment that he's had that has been working out and been a profitable thing. So to me, and what's worked for me when it comes to true financial wealth, is to think about it a little bit differently than I think what a lot of people do. So the first step for true financial wealth, in my opinion, is to have actual diversification. And what I mean by actual diversification is, can you imagine being in retirement and having yourself set up in a financial position that it really doesn't matter what the stock market does? You don't have any stress if you retire at the wrong age and then the stock market goes down and crashes, and then if you live 5 extra years, and you don't have any stress that the money will run out. So when you have investments that aren't just tied to what the stock market's doing, you're able to do that. Okay, so an actual diversification, not just a diversification that resides within the same arena. Okay, then the second step when it comes to true financial wealth is passive income. And when it comes to passive income, what's incredible about it, when you are able to achieve that, and let's say you're used to spending $20,000 a month, and when you have passive income that's coming in and generating you and working for you and making you $20,000 a month, the amazing thing that happens is that all your expenses are covered. And the interesting thing is that a lot of times we think when it comes to investing in terms of, I need the biggest nest egg that I possibly can. And retirement is not a nest egg problem. It's a cash flow problem. And that's why we work, isn't it? So we can have cash flow because we have expenses that come up. Okay, so retirement is a cash flow problem, not a nest egg problem. So who would you rather be? I want you to think about this. Would you rather be someone that's retired and that has a $5 million nest egg in the stock market? Okay. Or would you rather be someone that has $4 million net worth and they're generating, let's just say that your monthly expenses are $20,000 and they're also generating $20,000 in income. So the fascinating thing about this, if you really think about it, is in this case, when you have a $5 million net worth and it's tied to a volatile investment that can go up and down, like the stock market, if it goes down 20%, then that nest egg gets shrunk. And then if you need $20,000 or $240,000 a year to live off of, not only are you taking that out of your net worth, but just to live, and when you get to be 73, they force you to take out money, they force you to take out distributions, right? So the nest egg's going, in this case, is going down because of what the market did and down because you're taking money out. In the case of the person that's worth $4 million, they have $20,000 coming out. Well, that's what the required distribution is. So they don't have to take out any more than that. They have enough money to cover all their expenses, and then the $4 million stays intact. So when we talk about having something to leave to the next generation as well, that's a big part of how you do it and how you have some money left over at the end of the day. Even if a health issue or an assisted living situation happens where you're in that for quite a bit longer. So when it came to investing in real estate, I've been doing this 15 years. We've done over 3,000 deals now, and I studied a lot of different investing vehicles. And what happened for me was I was investing originally in Apple stock right out of college. This was over 15 years ago now. And at first I made a lot of money, and I got some good returns, and then I ended up selling the stock. And then a year or so later, I said, hey, you know what? I'm gonna invest more into Apple again. And I put more money into it, and the earnings report came out, and the earnings report said something like, Apple made the most amount of money it's ever made in the history of the company. And I got really excited. I'm like, all right, I made a great investment. This is great, the stock's gonna go up. And the stock market, the price went down. And I thought to myself, this literally was the most profitable the company had ever been in its history, and yet its stock market reacted negatively. And what happened in this case was it was because of the perception. People thought that it was going to be even more profitable, and when it wasn't quite as profitable, the stock market went down. And I don't know about you, but like the decision that I made at that point was, you know what? The thing about real estate, it has four walls, it has a roof. It's an asset, regardless of what the actual price is of the home. Someone needs to live somewhere. So regardless of what the economy is doing, there's a real value there. It's shelter for somebody. It's one of our most basic human needs if you look at Maslow's hierarchy of needs, right? And so I decided to go down and double down into real estate. And I'm really fortunate. I'm lucky I did, because I have it set up now. And I have it structured to where I don't have to worry about college education. So I have 4 kids, and when the kids get to college, I can sell one of the rentals that I have and cover that. All right, so if you're at all curious when I say that, hey, I could be fully retired for the rest of my life just at the age of 40, I'm gonna dive into what I did to make myself successful and to set myself up for that and share that with y'all. So make sure you check out the other video, and I'll see you in the next one.